Hey everyone, giddy up. Safe banking is collecting more and more momentum. What does this mean for cannabis stocks? To the moon. Here's why in our latest podcast. All right, let's now shift to U.S. cannabis, and our guest of the week is Matt Hawkins. He's the managing partner of Entourage Effect Capital, which is based out of Austin, Texas. It's one of the leading funds in the cannabis sector. Matt, I appreciate you joining us. How are things?
Good, Chad. How are you, bud?
Good. It was good to see you last week in Vegas at Rosie's party. Needless to say, as much as the investment world's a little bit stale and slow, you couldn't tell by it at that event. Cannabis seems to be alive and well, does it not?
Yes, it does. And I think that there was also a good bit of it's great to be back type mentality as well.
Yeah.
So it was good to see everybody.
Yeah, for sure, seeing face-to-face. I want to begin, and Anthony and I were talking about this earlier this week regarding our takeaway from MJBiz in Vegas last week. We saw MSOS rally sharply at the beginning of the conference, and there was excitement in the air. Rumors surfacing about safe banking perhaps passing before the end of the calendar year. And then just like that, everything stalled. And before we get into the whole legislative, when everything's going to pass, what you're thinking, first thing I wanted to ask is how was your week while you were there? And what were some of the things that you heard? And what was your big takeaway?
Wow, that's a lot. I would say that for us, it was more, it was a grind. We had I was in meetings from 8 to 6 all day, every day, ranging from new opportunities to catching up with our existing portfolio. It's such a good event because everybody's there. And so you can see the whites of people's eyes, which obviously it's been difficult in the past year and a half or so. But more importantly, you're touching and feeling your investments. And so that's obviously key to any industry. But for us, especially with what, just kind of the ups and downs of a nascent industry, it's good to have that.
When you're seeing new opportunities, do you mind being maybe a little more specific? What are some of the trends that you're starting to see that are changing? Because, 6 months in this industry seems like 6 years compared to others, does it not? Yeah, true.
Well, I'll just kind of start with what our premise is for our third fund, which is scale building. The whole concept is to build as many larger size companies and as many verticals as we can in advance of legalization, because there's tens of billions of dollars waiting on the sidelines to come in here, and they ain't writing small checks when they come in.
No.
So you better have built up some critical mass either within your portfolio or in the investments that you're making going forward. And because of the size of our fund, we want to write, $10 to $20 million checks, and that can move the needle for companies that are looking to get from, say, 50 to 100 million in top line to, 200 to 300 million in top line.
Right.
And for this industry, that's what scale is. Texas, absolutely not. Texas will be, it's eons away from moving at all. But the Southeast is a different story. There's a lot of really good medical plays in the Southeast, and with all the other limited licensed states that are in the Midwest, Mid-Atlantic, even some in the Northeast, there's a real chance to cobble together single state operators into larger plays, which is kind of exactly what our premise is, what I just said. But scaling operations scaling companies at the operator level is certainly part of our strategy. I tell investors this all the time. I challenge any investor to find an opportunity that exists both on the private side and the public side where private investors have a first bite at the apple above institutional capital. There is no such industry that exists like that. And as a result, it's good and bad. The bad is that most of these folks are retail investors on the public side, and they get wishy-washy, and they get, and so they get in and out of stocks. Whereas institutions are more, we're going to hold this, and ride this. And, the industry unfortunately needs a little bit of that. But so it's going to be choppy waters until then. But if you have the staying power and you have the ability to write some checks, I think it's a fantastic opportunity across the entire sector.
Yeah. Where are we? And I know this is a question you probably get asked a lot. There's a lot of people like retail investors, and I can see the smile on your face. You know where I'm going with this, but SAFE Banking, and I'm sure you get asked that 4 or 5 times a day, but like insiders such as Brady Cobb, they continue to insist passage will remain a possibility this year. Is that wishful thinking?
Look, I know Brady. I like Brady. I think that might be slightly wishful thinking, but I do think that it's in all likelihood, a first quarter event. It's just the reason I'm more accepting of a passage of the SAFE Banking Act, meaning that I think it's going to happen, is because now you've got banks that want it, and so
of course.
They can move the needle on some decision makers, and so the problem we all know that exists in the states is that there's just so much partisanship and quarreling, and the far left doesn't want to have commercial type legislation passed without social equity, and so there's just even kind of the left wing side of this industry, I think, feels that it just doesn't make sense to bundle it together. Let's just separate the two. We all want it. We all know it's necessary, but there's just so much distrust in Washington right now that's just the way they're going to do things, and it's just terrible.
But putting this all aside, you think this is actually an event that you could see it pass in Q1 of 2022?
I think the SAFE Banking Act could, yes.
Interesting. So outside of legislation, let's find out. As you said, it's a little choppy right now, and you have a big position in this space. What's your take on stocks right now, knowing that it's completely, as Anthony said, dislocated from fundamentals? Who do you like?
Well, I think obviously the larger tier 1 MSOs are, I think, great buys right now. I mean, there are some sneaky good buys that are at the tier 2 and tier 3 level, some of the single state operators. I mean, I'm not going to promote stocks, but we are principally involved in a few of those, and we see nothing but good things ahead of us. I think you're going to see some consolidation occur to get tier 2 and tier 3 entities closer to that tier 1 range, and then you're kind of to the victor goes to the spoils at that point.
Do you see mergers and acquisitions happening fast after SAFE Banking, or it's going to come regardless?
It's going to come regardless. I mean, we've been watching this consolidation wave kind of play out slower than we thought over the past year and a half or so.
Yeah.
I think it's going to continue, and it's going to pick up pace. But I don't see it being all of a sudden like this. I mean, I could be dead wrong. It could be a situation where things just change dramatically, but I think it's already going there.
Yeah, you're seeing that now for sure.
We invest up and down the value chain. So we look at ancillary companies, we look at tech plays, we've got biosynthesis plays, genetics, all that in our portfolio. And like I said, testing, for example. I mean, there's all kinds of sectors that need a boost of equity to get to the next level, and we're excited to be able to provide that capital.
Yeah, well, regardless of how this all unfolds from a legislative standpoint, as you can say, it's just about managing expectations right now to the investor. But needless to say, this industry has got huge growth, and we barely even started. But listen, I appreciate the time to checking in, our guest of the week, and let's keep in touch.
Absolutely. Thanks for having me. Great to see you last week. Let's do it again.
Yeah, let's do it again soon. Thanks, Matt.
Thanks guys.